Welcome everyone to today's video. Tax season is around the corner and I'm starting to get a lot of questions about the qualified business income tax deduction, more formally known as the Section 199A deduction. It's a valuable tax break for many small business owners and investors, especially those that invest in mortgage REITs such as ours. So how did the QBI tax deduction come around? The history of the qualified business income tax deduction, particularly concerning mortgage real estate investment trust, also known as REITs, traces back to the Tax Cuts and Jobs Act of 2017. This legislation introduced the QBI deduction, providing eligible pass-through entities, including REITs, with a deduction of up to 20% of qualified business income. So where do you find the income that qualifies for the QBI deduction? Well, let's break it down. First, obtain a copy of your K-1. If you're a partner in a partnership, a shareholder in an S corporation, or a beneficiary of an estate or trust, you'll receive a Schedule K-1 just like this. Second, look for ordinary business income, often found in Box 1 of your Schedule K-1. You should also keep an eye on Section 1231 gains and losses, typically recorded in Box 9. Third, ensure that your share of the income meets the eligibility criteria for the QBI deduction. This is where I always recommend talking to a qualified tax professional. Fourth, calculate the QBI deduction. You can calculate your QBI deduction using Form 8995 or 8995A, depending upon your tax situation. Fifth, complete your tax return. Include the calculated QBI deduction on your individual tax return in the appropriate section. Now remember, keep your Schedule K-1 in supporting documentation for verification purposes. And so that's the background on the QBI deduction and how you can find the income that qualifies for this tax deduction. Remember, if you're unsure or need assistance, consult a tax professional. Thank you for watching. If you found this video helpful, don't forget to subscribe for more informative content. And as always, consult your tax professional for personalized advice. Thanks for listening.